How many people in this room have heard of the UFC app? Hopefully everybody's hands will raise. How many people in this room have actually downloaded the UFC app? Wonderful, wonderful, wonderful. If you have not downloaded the app, you can go to ursacoop.com and scroll down, and there should be a place where you can click here and download it and add it to your desktop. Or if you want to add it on your phone, we have these cards here with the QR code that you could go ahead and click on it, and you should be able to download it on your phone. The beauty part about these apps are you can sign contracts online. You can look at scale tickets within 30 minutes. They will be synced, all from your phone. If you have multiple accounts, like for example, maybe Scott Ray wants to see Paul Ray's account or other accounts, we can link and sync those accounts as well. So you don't have to have multiple logins. One login, one app. So if anybody has any questions or can't download it, any issues, feel free to stop one of the UFC employees and let us know. But we're pretty proud of it. We launched it on June 25th, and we have a little over 1,000 users so far. So just think of every contract that we save from having to mail with a stamp and then a return envelope. That's just that much money that the co-op is saving as well. So it's a pretty neat tool that we're pretty proud of. It took a lot of behind-the-scenes work to get it launched. But if anybody's got any questions, don't hesitate to ask any UFC employee on it. With that being said, I get the fun duty to introduce Brian Burke, then I guess, huh? All right, well, this is Brian Burke with John Stewart and Associates.
Appreciate it very much. Thank you, Cindy. Been doing this for a few years. I think we're up to maybe 14, if my math is correct. Not always in this building. We've moved around a little bit from year to year. It's always good to come back to Greenfield. I'm still going to call it Greenfield. I don't care where you're from. This is Greenfield. I'm going to go over several things. I'm going to try. I always feel like when I do some presentations like this, I have too many slides. I try to cover too much ground, and I'm going to try to be a little bit more practical with some of the stuff I want to talk about. There are about twice as many slides up here that I am going to go through, but I want you all to know this presentation will be at, whether it's Scott or Susie or Kelsey or Roger or whatever. If you want to see this presentation, just give them a ring, email, whatever, and they can send it to you just in PDF and you can look through it. Because there is a lot of charts and tables and things in here that I kind of have in what I call the stock presentation, but it changes every week. So let's get started. First off, it's no secret the corn market's tough. We've had a bean rally that's lasted a blink in late October to November. It's hard to find a lot of bullish fundamental information today. There's a reason corn is 445, 444, and not 545, and it's because there's not a lot of news out there that's supportive of that kind of price. I get asked a question all the time that is impossible to answer, which is, when do you think we're going to see 550? When do you think we're going to see $6 corn again? And there's no way to answer that question. There's not. Something has to happen for those prices to come back into play. And that something is not happening. That's why the prices aren't there. So when we think about what could happen, there are some biofuels policies things that could happen. Of course, there's always weather. That's in play every year. But there's some things that can happen, but that's not the way the wind's blowing today. And that's the challenge that we have in the marketplace. I am going to try to go through this presentation and not be more depressing than what the markets already are. I mean, it's a depressed price because of the fundamentals that we have. I'll highlight a couple of those, but I want to go through a few other items as well and kind of an overview of this presentation. If you do have any questions, please holler them out. In a group this large, a lot of times questions kind of fall to the wayside, but it's the best way to kind of get some engagement of some of the questions you want to answer. Very quick little overview that I want to go through here. Record U.S. corn production. Sometimes that can get glossed over. It was not just a record U.S. corn production. It was a record by a significant amount. We planted the most corn acres in this country since 1936. We had a record yield on top of those acres. We had 1.4 billion bushels more corn supply at the beginning of this crop year of one we just harvested than we've ever had before. 1.4 billion. That's not a small number. That is a lot to chew through. We still have a 2 billion bushel ending stocks number, which is a pretty healthy amount of ending stocks with the largest export program out of this country we've ever had. If you want to look at a bright spot, if you would have told me a year ago, Brian, we're going to have 3.2 billion bushels worth of corn exports, a record by almost 400 million, and said, what do you think the corn price is going to be with that? That's the only number you told me a year ago. I just said it for sure would have a 5 in front of it, because that's a huge number. We are exporting the living snot out of corn right now. Part of the reason we're exporting so much corn is because we had a very poor soybean program in the fall when we typically export a lot of beans, especially to China. So we filled the pipeline with corn because that's what we were able to be competitive on, because China wasn't buying our beans until late October when the political activities happened. So we're off to a fantastic start on corn, record pace on corn, and we still have the highest ending stocks number we're printing so far in the last 5 years on top of that. And that has everything to do with our production and our acres. So production numbers are very, very strong. Soybeans are probably going to claw back a few acres. It's interesting to me, the acreage discussion, I'll just get into that right now, is normally you would think in a corn belt situation where we have a lot of rotation from corn to beans and back and forth, many people in this room might be 50-50. Many people in this room might be 60-40. If you were 60% corn last year, you might be 60% beans this year, or vice versa. You might rotate 40% of your acres every year. In a rotation situation, like we have in the bulk of the corn belt, if you just come off the highest amount of corn acres since 1936, you might think to yourself, this is going to flip into a very large amount of soybean acres. And that's not the case. We have a very significant amount of this country, amount of acres in this country that corn has been king for the last few years, and it was especially king this fall. Most of that is in the West. One thing the West suffered from, so when I say West, I mean North Dakota, South Dakota, Minnesota, Nebraska, Western Iowa. That's the kind of corridor I'm talking about when I say West, Northwest. The soybean market for that part of the country is off of the PNW, the Pacific Northwest, by rail to China. That's where those beans go. Most of those beans are shipped in a 3 or 4 month period of time, October, November, December, January, and they're kind of out the door. This year, we didn't sell any beans to China until late October. That entire program didn't exist all fall. So the basis in that part of the world was somewhere between $1 and $1.50 under the border. And the yields in that part of the country are typically in the 50-ish range. So when you run the math on that, and on top of that, most of those states I just mentioned, all but one, are at least today, these numbers can change a little bit, but at least today have record corn yields at the same time. We have a lot of producers. I have a lot of elevators that have producers. I don't talk directly with too many producers on a day-to-day basis, but it's 220 corn in western Minnesota with an APH of 180. There's a lot of that kind of stuff in the Northwest. So for them, the decision is corn's the only game in town for me. And so even though we had 98 plus million acres last fall, we're still north of about 96 million acres to be planted this spring and for next crop year. Corn is still very, very much king. I can say in this part of the country, if you were blessed with a couple of good August rains, or at least one good August rain, some did and some didn't, and you got into that 75 or 80 bushel bean range, and beans had got up into the mid-10s or even 11 as we got post-harvest, your bean return may have been a little better in certain parts of the country, but that is a minority part of the country. Most across the corn belt are looking to plant just as much corn as last year. I think we're going to rotate away a few acres. Beans will be a benefactor of that. The other thing I think corn and beans are both going to benefit from is the worst returns in the country right now are cotton. We grow 10 million acres of cotton in the Delta. That's the worst return per acre on the map. Behind that is rice. We grow 2.5 million acres of rice. Most of that's in the Delta. It's worse than corn and beans. And then third is milo, sorghum, Southwest. That has a basis of $1, $1.20, $1.30 under. And the Kansas growers and Oklahoma growers and Texas growers that grow a lot of grain sorghum or milo are going to switch to corn in the Southwest. So we're losing some of those other crop acres. That will be a combination of corn and beans that come back, but the favor is still very much soybeans. So I wanted to address that early. If in your mind you're thinking about your next fall's marketing plan, thinking that we're going to lose a lot of corn acres, gain a lot of bean acres because of the spread that we planted this year, I think that would be an incorrect assumption. We're going to have just as many corn acres, maybe off a couple million, but it's still going to be one of the top 3 or 4 acreage crops we've had in the last several decades. January 12th report, that's next Monday. We typically have these meetings around this time of year in January, so I feel like I talk about this particular report at this meeting quite often. It's the biggest report of the year. It's every year, the January WASDE report, which incorporates the D1 stocks, is the biggest report of the year. It is the first measurement of the crop. When I say measurement, that's a NAS survey, that is producer surveys and commercial surveys about how much they have in storage on the farm and how much they've marketed and so forth. There's some integration with the FSA offices. But that's the first measurement of the crop. Now, this report on Monday tends to be the one that brings the most volatility with it as well. We desperately need volatility. Desperately. I mean, some people might not like volatility because it makes them a little anxious. We need volatility. Right now, the corn market is the most boring. If it was a patient on the table, it'd be dead. It's not moving. I don't know if too many people think of charts and technicals the way I do sometimes, but there's these lines called moving averages. The 10-day moving average, the 20-day moving average, the 50-day moving average, the 100-day moving average, and the 200-day moving average. So it's the averages of all those days. Every one of those numbers are 9 cents apart. It doesn't matter if it's a 10-day range or a 200-day range. It's 9 cents from top to bottom. That is as boring as it gets, folks. It's horrible. 440, 450. You could buy 440 10 times in the last couple of months. You could sell 450 6 or 7 times in the last month or two, and you'd have bought the low and sold the high 5 or 6 times for a whopping dime. I mean, that's how boring the corn market is. So it's quite boring. I'm hoping we see some volatility come out of this report on Monday. When we think about stocks reports, and this being the first one, there's a couple things that I can promise you, and a person speaking in kind of a research environment should never make promises or never make absolute statements. But one thing I can promise you about January's 12th report next Monday is that the numbers that they come out with will not be what you think. They'll be wrong. And I say that because there's no way you can prove the USDA right, there's no way you can prove the USDA wrong, and everybody has opinions about what the report should say. Everybody has those opinions. And the degree of how wrong they are, I'm going to put a number on it, because I want to go through this little exercise. Just humor me for a minute. Let's say that the degree of error on any stocks report from the USDA and the NAS group, the National Ag Statistics Group, is 5%. Doesn't sound like a lot. And I'm going to split that number in half. I'm going to say they're going to be a 5% top to bottom error. So 2.5% that they could be wrong to the upside, 2.5% they could be wrong to the downside on production. Okay, on production. Production this year is over 16.5 billion bushels. Top to bottom 5% is 750 million bushels, right? You take a 2 billion bushel export program and you have an error factor of 5%, that is somewhere between 1.25 billion bushels of ending stocks and 2.75 billion bushels of ending stocks. And that's a 5% error, top to bottom. So the January stocks report, and every stocks report, every quarter, let's take that same 5%. That 5% goes from a 16 billion bushel crop to a 12 billion bushel crop, 12 billion bushels of supply that's left, 8 billion bushels of supply that's left, 4 billion bushels of supply that's left, for all 4 quarters. Take that same 5%, your margin of error just shrinks all year long. So the greatest degree of uncertainty that we have coming off of a USDA stocks report is the one we're going to have Monday. Such a small little error in what they say, you can't prove them wrong, you can't prove them right? such a small degree of error has a huge implication for what the tone of the market is for the next couple of months. Most in the marketplace are looking for yield of corn and beans to come off a little, maybe 184, 183, down from 186, which is the current number, and maybe a half a bushel or so lower on soybeans. We really need to see something below 182, 181. Some people may think that's the correct number. Everybody has their opinion. Some people might think it should be below 180 for whatever reason, right? Let's say it's 179 or 180. That will be enough to catapult this market 25, 30 cents. It will probably not be enough to catapult us to $5. We just have too much supply of corn. Something very material and structural is going to have to change for us to get to $5 corn. We will absolutely see $5 corn again. I'm just not sure if it's going to be this crop year. It's very hard with what we know today to say we can print a 5 handle on corn. It's very hard. If we get a 180 or a 181 and we move a deal and we move March corn up to 465, 470, 475, that managed money will start to buy a little bit and they'll start to grab that momentum. And we've got in the neighborhood of 14 billion bushels worth of farmer corn to sell in that kind of a rally. And that will probably cap the rally. We've got a lot of farmer corn that is owned by the farmer sitting on the farm or in the farmer's hands at the co-op or whatever, more so than we've ever had. And I'll get to quantifying that in a minute. So I'm really hoping to see some volatility on Monday. Everything I just said about maybe going to 475 or 480 if we get that 181 or 180 bushel yield, what happens if the yield's 186? Okay, I don't think it's going to be 186. But it's well within that standard of 5% error, right? What if it's 187? I mean, everyone's going, oh my God, please don't be 187. Okay, if it is, that's 410, 415, 420 type corn futures. I don't think that's what's in the cards, but I hope that the yield at least goes down a few bushels to 183 or below to give us a little bit of life. And I truly mean this, if we get that little bit of life, we need to have some selling shoes on. Because if not, the only thing you're banking on is a weather problem this spring. And I know many of you don't think about grain prices in the terms of cost of funding. I try to preach on this all the time. But if you sell 460 corn in January, that's the same as 476 corn, 477 corn in June. It's the same as 485 corn in August. You have to keep that. If you're not earning 3.5 to 4% interest on your money, and your targets aren't at least above that for the summer, which will be difficult, 460 is a better sale right now if we get that opportunity. So we need to think about the value of that bushel turned into cash. It's worth about 3.5 cents a month. So in those terms, it's going to be very difficult for us to really get ahead of a market that's about 460 or so. South American weather, I'm going to skip that for now. I've got a slide later on. I'll just breeze through that. I want to go through a 45Z policy update towards the end. The Russia-Ukraine war is in the news all the time. One of the reasons we're exporting 3.2 billion bushels of corn this year, and maybe even a little more, is the Russia-Ukraine war. That continues to hold about 2 million tons, which is rounded up a little bit, 800 million bushels worth of corn off the marketplace due to their lack of production because of that war. If you're in a war zone, you're not planting corn and beans in that eastern part of the country. If that war ends, it does two things, and neither one of them are bullish. It brings that land back into production over about a 24-month time frame. It doesn't come back into production overnight. There's a lot of things that need to happen, but there's a lot of money waiting to invest in Ukraine to rebuild it once that war is over. I don't know when it's going to happen. I have no idea. I felt like we've been close a couple of times, and then it kind of feels like we take a few steps backward. The other thing that will happen if we were to end that war is energy prices will go lower. They're already pretty low, historically speaking. One of the peace deal bullet points that I guarantee you Russia will make sure is in the peace agreement is the ending of their sanctions. Russia typically sells Europe a majority of their crude oil, gasoline, refined gas, and natural gas. They also sell most of North Africa. They have not been selling that due to these sanctions the last few years. Today, we ship between 25 and 30 vessels of crude oil to Europe a week. That will stop when that war stops, and it will mostly come from Russia. I don't try to guess crude oil price all that often, but if I read the Morgan Stanleys and the Goldman Sachs and some of the refinery companies put out some analysis every quarter or so, if that were to end, most of the guesses of where crude oil goes has a floor in front of it. $45, $46, $47 a barrel. Today it's $55, $56 a barrel. So we're talking, a good, 15, 18% from where we're at today. So that energy complex could also come down if we end that war. So right now, our export program, the other reason our export program is 3.2 million bushels, as I've mentioned a couple times already, is Mexico. Mexico is one of the bright spot countries in the world today. I don't know if you follow that country very much, but when you look at economic indicators, GDP type numbers, domestic growth year-over-year type numbers, and their manufacturing rates, you look at their employment rates and unemployment rates and all those sorts of things. One country that's rising to the tops consistently the last 2 years has been Mexico. Apparently they do really, really well down there when they make all of our stuff, right? So they're making all our washing machines, we're making all of our cars, they're making a lot more of our clothing and all that sort of stuff. They're doing pretty well down there because they're making a lot of stuff to sell to us, okay? The other thing they've had the last couple of years is a drought. There's been a pretty serious drought 2 years in a row in Mexico. I've got a chart later, I'm just going to breeze through it, but it shows how much above last year's record this year is. 3 years ago, we had never sold 20 million tons of corn in Mexico in a previous year, maybe 4 years ago, now that I think about it. And we're upwards of 24, 25 million tons. It's 15, 20% increase in 2 years on top of the record 2 years ago. So the amount of corn we're selling to Mexico is huge. They're one of the other big reasons we're exporting 3.2 million bushels. It's Ukraine and it's Mexico primarily. Last thing, just as a quick overview slide, the bridge loan payment. There's announcements out last week on what those per acre payments were. They're coming out the end of February. There's a lot of speculation about what will that money do to the average producer's marketing plan. There's a lot of speculation that says, you don't like the price today, and I get it. I don't like the price today either if I was in your shoes. And I've got some money coming at the end of February. It's not a monster check, but it's $30, $40 an acre for corn and $30 for beans or something like that. That's going to put in the farmer's mind, on average, an ability to continue to wait until prices hopefully turn around. It just buys time. And I honestly think that's a mistake. I think you should have price targets in place. If we hit this 460 or 465 kind of number in January, you need to sell it regardless of the fact you've got some money coming in February from this bridge loan program, or bridge payment, not loan. So I do think it will affect producers' marketing plans. I don't want it to affect yours. It's there, it's money, it shouldn't change your plan. It shouldn't change your plan. Let's go through a couple of other quick things. I want to compare, you're not going to be able to read any of this. I want to make two corresponding comments, one about corn, one about beans, and it has to do with the bottom part of this chart and a similar chart for soybeans. And what I'm looking at here is the commercial position of corn. So what is the commercial? This is a category of trader. Ursa Farmers Co-op is a commercial. Okay? You sell 100,000 bushels of corn to Ursa tomorrow. Ursa is going to hedge that purchase. So they purchase it from you. They're going to turn around and sell the board, sell futures on the CBOT. That 20 contracts is 100,000 bushels. Scott's going to sell 20 contracts tomorrow if he buys 100,000 bushels from you. When we see a lot of ownership in the commercial system, when I say ownership, I mean corn ownership in this case. If URSA owns a lot of corn, a lot of the bins that they have corn in, they own them. You don't, they do. Okay, if we're in that scenario, URSA's going to have a lot of short positions on the board. Okay, the shorter those positions are is a representation of how much corn the system owns. So now let's take that times a million and say it's not just URSA, it's every co-op, it's every elevator, it's every ethanol plant, it's every barge terminal, every shuttle loader. What are their short positions? Their short position is this black line right here, and it's short about 300,000 contracts. Last year, that got to over 700,000 contracts by the end of January. We are on the longer side, or less short side, of the last 10 years with a 1.4 billion bushel record crop bigger than we've ever grown before. Okay? Now I'm going to contrast that with the soybean position right here. Okay? Soybean position is this black line. Okay, this is the net short position of soybeans. There's only 1 year in the last 10 that the soybean position has been shorter than it is today. We've got a lot of short positions in soybeans in the commercial system. A lot of grain has been sold by the farmer to the system. Versus a part of the system. And we're carrying the largest short position outside of 1 year in the last 10 years. This should tell you something very, very clearly, and it might not be something you think about, but I wanted to draw it out. When we had that rally from October to November that lasted 2 or 3 weeks in beans, the farmer sold the living snot out of that bean rally as an aggregate, okay? To where their position is greater than it has been every year out of the last 10 except for 1. It says the opposite, not quite to the same degree, but it says the opposite on corn. You didn't sell as much of this 1.4 billion bushel record corn crop year to date. So we're not even in the top half with the largest crop by 1.4 billion bushels. We should see this black line way down here at some point in time this year. When's that point in time going to be? When we have that massive short position by the commercial system. You don't want to be long after that. Because that means we've had a little bit of a rally. That means the farmers aggregately sold everything. And we're going to be at the mercy of how quickly the commercials are going to get it into the system. And they're going to move it. URSA's going to move it. The ethanol plant's going to make ethanol out of it. Barge loader's going to load barges. The shuttle loader's going to load shuttles. They're not going to hold that whole position. The only one who holds positions for months and months and months on end are the folks in this room. So I'm very, very fearful. And I don't talk a ton about basis, but I'm very, very fearful that if we take this bridge payment that kicks the can down the road, and we wait for a weather rally, and we have all this corn that's in the system by the producer, we're not going to be able to fit it through the door in the last 3 months of the year, July, August, or June, July, and August. I can't tell you what the board price will be in June, July, August, but if we haven't had a significant farmer movement before then, I can tell you the basis won't be very pretty. That's the main point I want to make on these 2 slides back to back. We've got more corn, and I don't know about this room specifically, but if I just said the room full of the American farmer, we've got more corn to sell as a group of farmers than we have ever had on January 6th. I feel very, very confident in that statement. And so that's the part that makes me nervous, all right? That's the part that makes me nervous. Because that generally doesn't work out really well. We may get bailed out by a rally in the market because of January 12th report next Monday and things like that. I'm going to go through a couple of these slides really, really fast. This is the increase in production by state in percentage terms versus the 5-year average. Corn production by state versus the 5-year average. All this is trying to show you is just how big this crop was last year. Okay? Illinois, 8.8% larger than the 5-year average. Missouri, 16.7% larger than the 5-year average. Iowa, 12.8%. North Dakota, 54% larger than the 5-year average. South Dakota, 37% larger than the 5-year average. Imagine growing a third more corn in a state than you've ever grown before. That's where the acres were at this year. It was in the Northwest. That's where they are also going to be next year. Because of what I said earlier. This part of the country, this western part of the country is where all the corn acres expansion has been, in replacement of beans and wheat mostly. Production numbers up there, that 16.7 billion bushels of production, you see that spike up there, that's just this year's number. Soybean production, it's down because the acres were down. 3% below the 5-year average in Illinois, 3.9% below the average in Missouri. I'm going to go up here to North Dakota again. We don't talk about North Dakota very much. How can you have 4% more production of soybeans in the same year that you have 54% more production than the 5-year average of corn? You have yields in North Dakota that were absolutely off the charts. APHs in North Dakota is in the 140, 150, 160 range. Many farmers, I've done a couple meetings up there this year, many farmers say, I grew 40 bushels more per acre than I ever thought I could. It's insane how good some of those yields were. So I say some of that because I don't, backyarditis is a real disease, right? So when you think about, I don't think we grew that big of a corn crop. Maybe not here, but I'm trying to express there's some places where we have. The other thing that's interesting on the acreage discussion I talked earlier about a little bit, this little squiggly line series right here that, again, it looks like a 3rd grader drew it. The solid green line across the bottom was last year, and all I'm doing with this is taking the soybean price divided by the corn price. The average over the last 20 years is around 2.4. That is the theoretical break even for the average U.S. farmer, where he makes the same amount of money on soybeans as he does on corn from a price perspective. Holding all things else equal, we continue to favor corn. We favored corn significantly all year last year. If you think about last winter's corn prices for the fall versus bean prices for the fall we just completed, corn won the whole winter last year. And that is a lead-in as to why we planted so many acres last spring. We were financially incentivized to grow more corn acres. Okay? We're doing the same thing this year. Right there, the dark black line is this year, next to the green line. We're basically in the same spot we were last year. Seed decisions get made today. Fertilizer, we had a pretty good fall for putting on anhydrous, putting on all various forms of inputs, right? It's expensive. Now tell anybody in this room how much you're paying for your input bill. It's insane. I know that. I also know we ran out of anhydrous in a lot of places this fall. I also know that I've got some seed varieties in the West that Pioneer's out of. There's that much demand for corn seed right now, especially in the West. This chart, we've started to look at inputs a little bit differently. We did a chart of how many bushels of corn does it take to buy a ton of various types of inputs. How many bushels of corn, right? How many bushels of corn does it take to buy a ton of DAP, a ton of NH3, a ton of urea, a ton of potash? And these numbers are all up and to the right. I mean, we're some of the highest levels we've ever had. A lot of that also has to do with the price of those bushels as well. So I get that it's expensive. I don't think, with everything that I have said, we have too many producers, maybe not in this room or any other room like this across the country, who's going to plant, who's going to leave some acres unplanted next year. I mean, we're really truly going to have to change the dynamics of what we plant, what we produce, and we have to do it by a supply control. The only way that's going to happen is a very painful, ugly, low-price way to do it. We don't want to go down that road. We want to have the demand to pull us out for the products that we have. And that gets into the other half of this presentation, which is the demand side of the corn and bean market. What's driving it? What can continue to drive it? Where can we see some supportive things? So I'm going to skip a few of these. This is your payment. You guys have probably already all seen this. $44.36 on corn, soybeans $30.88. Wheat acres $39.35. I did get clarification. If you planted soft red wheat and you turned around and planted beans on that as a double crop, you do get both of those payments. Don't know if you knew that or not. I didn't know it until yesterday. You do. But anyway, I'm not a crop insurance expert, so I don't want to get too deep in the weeds on that stuff. Let's talk about demand. This is an S&D. We all see S&Ds. This is 10 years of history. What I've done here on the right is taken a 184 yield and a 180 yield. Both of them are lower than what we had last month. 184 is kind of our high yield scenario for next Monday. 180 is our low yield scenario for next Monday. And the big demand number that jumps off the page is this 3.2 billion bushels that I have mentioned a few times. The row, again, you may not be able to see it. The row is right here, 3.2 billion. And scan your eyes across our exports for the last 10 years. The highest number you're going to find is 2.8 last year and 2.7 about 4 years ago. We are so far above that, it's the biggest bright spot that we have, is corn exports. If our corn exports are the lead of our demand outlook, the only way you maintain that is to be the cheapest corn in the world. So think about that. If we're going to export our way out of this surplus of corn, the only way we do that is to be the cheapest corn in the world. No one in this room is going to stand up and say, sign me up for that. Exports are not the answer to higher prices, if that's where you want to, that's where you want to hang your hat. Okay? And I'm standing in front of a room that has a co-op that is built to export. Okay? I get this. I do know my audience. Ursa Farmers is here because it feeds the export market, and it does it very, very efficiently. But that export market is the lowest common denominator clearing price for corn in the world. If we're going to demand grow our way out of this surplus, we need some more value-added demand somewhere else. That value-added demand needs to come. The quickest way to do that is to get into the renewable fuel side of things. I do not think there is the political will to do this today, but one of the ways we can really see a demand shift in corn is to see a staggered mandate towards E15. Most states allow E15 to be blended year-round. That's not the hurdle anymore. The hurdle is the political will to push it. You can blend E15 today in, I think it's 44 or 45 states. There's a few states with lawsuits that are hanging out, like Oklahoma and Kansas, because they're big refiner states. But that's voluntary. It just means you can blend E15 within the system that you have, within the pipeline that you have, within the retail system that we have for gasoline use. But we don't have anything pushing it to E15. So if we were to do that, that would be huge. That would take this 5.6 billion bushel number up to closer to 7.5 or 8 billion bushels over the course of 5 or 6 years. That's a huge deal. I don't think this administration is going to do that. That's not kind of the DNA of this administration. To give you a little hint as to the DNA of this administration, and I'm not going to get into a red versus blue talk, but to give you a little hint into the DNA of this administration that we have today, every piece of legislation that was passed in the last administration or any prior administration that had the word climate in it has been eliminated. Not the legislation, okay? Because it takes another piece of legislation to reverse one that's already been passed. We can't go and just not follow the Biden administration's legislation they put through in 2020. They removed the word climate from all of those pieces of legislation. One of the things you may have heard about within the 45Z legislation that happened in 2021 is climate smart agriculture. This gets into how can we pull all the way to the producer a carbon intensity score? How can we lower the carbon intensity of growing a bushel of corn? They get into the no-tills and the greener inputs, the more green anhydrous, green nitrogen sources and things like that. It also gets into different types of rotations. They took what was called climate smart ag in the last administration, and they renamed it into farming for premium. It's like a VIP program. They just changed the name because the Trump administration was not going to have climate in the title of any piece of legislation. That's a little bit of the DNA of the administration that we're in today. You've seen the solar and the wind reversals in a lot of places. Some states are still offering some things, but nationally, federally, we have a lot of wind and solar projects that have all been walked back. So the DNA of this administration is not Green New Deal. You know what he calls it all the time. It's Green New Scam, right? I mean, that's the DNA of this administration. So I don't think we have the E15 political will to get it on the demand side. However, that would be one of the key pieces. Going to skip some of this. Our ethanol production is very, very high. We're actually running very close to a record on a week-by-week basis. This is the corn export volume in the upper chart here versus the 10 years prior. And that's how much of a record that we have on corn exports happening right now. And it's a huge number. It pops off the page. It pops off the page. The reason we have such large exports when we typically do not is because we weren't shipping very many beans this fall. We did not have a China bean program September and October. We filled up the export books with corn. So it's very counter-seasonal. The exports by major exporters, which is us, Brazil, Argentina, and Ukraine. So every buyer in the world buys primarily from those four origins. That trade in the first quarter of the year, September, October, November, December, sorry, the first 4 months of the year, was up 17%. The world bought 17% more corn in the first 4 months of this crop year than it ever has. I think that's a little bit of restocking, but that's a big number, and a chunk of that is Mexico. The United States, as a portion of that, if you look at this bar right here, look how big the yellow portion of this bar is. The United States, in that 4-month period, was up 82%. That's how big our export program is right now. That's how important our export program is right now. So we need to keep that up. I'm not saying that we don't. It's just not how we drive demand out the system into the system in order to take up all the slack. This is not a real long-term solution, to clear our excess supply, because we have to be cheap in order to do that. On the soybean side of things, again, I'm going to get to the biofuels policy. It's probably best if I skip several slides, because here's our export base of beans, worst ever in 10 years. Here's where we're at right now, right here. Compared to the previous 5 years, we're about 20 million tons behind, 800 million bushels, 750 million bushels. I want to get to my 45Z slide because I'm on that topic now. I want to address this really quick, and then I'm probably going to just pause for some questions. How many people have heard the term 45Z? How many people would say they're experts at what 45Z is? I should take my hand down too, right? 45Z is a biofuels policy tax code, like 401k is a tax code. 45Z is a tax code that was in the, what's the piece of Big Beautiful Bill? No, Big Beautiful Bill is the Trump, what was the Biden administration's bill? I can't think of the name of it, but anyway, doesn't matter. It was in that piece of legislation. That legislation, through the Biden administration, assigned carbon intensity scores, so carbon dioxide emissions, nitrous oxide emissions, other harmful greenhouse gas emissions. They assigned a value to them and created a tax rebate system for efforts to reduce those scores all throughout the system. And it was really focused on energy. How do we drive down the greenhouse gas emissions within the energy sector? And the CI score was set at a baseline. It tells you what the baseline is up there. Again, I'm not going to read this to you. If you want a copy of this presentation, I'd be happy to send it to you through all the URSA folks. The one thing that I really want to emphasize in this is that there is great potential in this legislation to drive demand not only for soybean oil and biodiesel, which is kind of where it's geared towards today, but it's also able to drive demand through corn. Okay? If an ethanol plant today lowers its CI score by 2 or 3 points, the average CI score across the country is like 41. Okay, if it goes to 39, if it goes to 38 or 37, their ability to get a tax rebate because of that lower CI score is in the tens of millions of dollars on a 100 million gallon plant basis. You can do some math, and Scott Irwin, U of I professor, he did the math perfectly a couple of months ago, but he was completely wrong, okay? He's completely wrong in the fact that it's not available today. But the math was perfect. The math says if you lower your CI score to 35 points, an ethanol plant can pay 45 cents more a bushel for corn. Okay? That sounds great. That 45 cents a bushel is going to go into the ethanol plant's pocket, but yes, they're going to run hard to make as much money as they can. Okay? The part that was misguided about that is how much of that will pull through to the producer. How much will the ethanol plant pay the producer more? And the answer to that question is not 1 red cent. The ethanol plant's going to buy the 100,000 bushels a day that he needs every single day at the cheapest price they can buy 100,000 bushels a day out, period. If they spend the money to tap into a CO2 pipeline, if they spend the money to sequester carbon into a well, if they spend the money to regenerate their electricity into steam or steam into electricity, it's called a kind of a cogen plant, CHP, consolidated heat and power is what it's called. If they spent all that money to lower their CI score, they're getting the tax rebate to do that. It doesn't change the demand for corn, it doesn't change the price they pay for corn. The other piece that's in 45Z is that climate smart ag piece I was talking about. And it's not called climate smart ag anymore, I think it's the VIB program, and I don't know what VIB stands for. That's where part of the lowering of the CI score for the plant, or the crush plant, which is someone like Quincy, okay, Quincy soybeans crush plant, some things that they can do is keep track of the baseline farming practices of where they buy their beans from, and if they do no-till practices and certain fertilizer practices or input practices, and the beans from the producers and companies that sell soybeans to the crush plant are aggregately lower CI scores because of those farmers' practices, that there's an ability to pay it back through the producer some of those premiums. That is not part of the system today. That is in the legislation, but it is purposefully kept out of what the ethanol plants and crush plants are doing today. That is not settled yet. That we're trying to get more clarity from the EPA on. There is no pathway today for any producer of corn and soybeans to get a premium for their corn or soybeans because they do certain practices. It is in the legislation. There is no definition within the legislation of what those practices have to be and how they're calculated, but it's in there. And there's been a big misconception out there, if you've been reading farm publications and things like that, where you should be getting a premium because you're doing cover crops and you're doing green ammonia and all those sorts of things. That's not there today. So I wanted to clarify that a little bit. It's possible in the future. It's going to take administrative and EPA clarification on what those terms are, and I'm not sure this administration has the will to really do that. Again, it's not in their DNA. It's a climate thing, okay? But this is where we can see some demand growth in the future. It's the most viable demand growth we have in the near term.
Question?
Yes, sir.
Is SAF catching on like they thought it would?
No. The question is SAF, Sustainable Aviation Fuel. The largest sustainable aviation fuel plant today is in Georgia. It will fit inside this gym. It is a pilot plant. The technology is early, very early. The hope is very big. Okay, I am not going to poo-poo SAF. Okay, the hope is very big. The aviation fuel market is big. There's a lot of gallons of aviation fuel, jet fuel that is consumed. Other countries like Europe are further along with policy to require SAF on certain percentages of the fuel consumed for planes that land in European ports, especially London ports and Paris ports and places like that. So there is some legislation to try to pull that in, but it's thimblefuls of quantity right now. It's very small. A gallon of aviation fuel today, don't quote me on the exact price, it's a fair amount more expensive than diesel fuel or gas. It's in the $5.50, $6 a gallon range. Somewhere in there is what a jet fuel gallon costs today. SAF is from a cost perspective. You gotta remember, this is research project type costs. We have to prove this technology. It's in the $12 to $15 a gallon range today. It's just not there yet commercially on scale. I still think today it's in the category of what cellulosic ethanol was in 07, 08, 09, when we were trying to turn corn stalks and that kind of stuff into ethanol. That did not come to fruition. I don't want to say SAF's on the same path, but we're at that same fork in the road with SAF. If it becomes commercially viable, we are at least 3 or 4 years away from seeing meaningful volumes of either ethanol, because it could be a huge demand source for ethanol. There's pathways of technology to take ethanol to SAF and soybean oil biodiesel to SAF. There's technology to go either one of those two directions, but they are very early in the technology cycle for me to say, let's hang our hat on SAF. We just can't say that yet. It's a good question. I've rambled for a while. Anybody else got some questions? I'm trying to flip the watch. Are you waiting for me to say something bullish? That's what I got in the meeting last night. Brian, when are you going to say something that is friendly? It's hard to find friendly news. Yes, sir, go ahead.
If this fuel price, crude oil, comes down, what's that going to do to the price for ethanol?
I'm trying to find bullish things. And you ask a question that has a bearish answer. If we see crude oil price go into the 40s, there is a pretty strong correlation between fuel price and agricultural commodity prices, because there's links between them. So ethanol price typically comes down, biodiesel price comes down, because they're all related. When we see crude oil go up and down, we see a strong correlation to soybean oil, as an example, because it's a feedstock for biodiesel. We see a good correlation, but not quite as strong for corn. If you're going to take crude oil down 15, 20%, we're probably not going to rally corn and soybeans. That correlation is relatively strong. They move in similar directions. When we see $6 corn, a lot of times we have $70, $80, $90 crude. They do correlate very, very well. So to be bearish crude oil, which is a possibility, especially if the Ukraine war were to end, that's a headwind for ag commodities. I will tell you something bullish. We have examples, one of them has just happened, of something that can come out of left field, and it doesn't necessarily make a lot of sense, but it's just the way money moves around in these markets from time to time. How many in this room have a safe full of silver in the basement? Anybody have any silver in the basement? Silver? Silverware. Yeah. Where? In the basement? There's a joke in there somewhere, but I'm not sure I nailed it. Yeah, start melting down silver. It's probably a lot of copper. Silver price in late November through December more or less doubled. Silver's been one of the worst. Silver's been one of the worst investments for 20 years, and all of a sudden it decides to double in a month and a half or 2 months. It's the impact of money flow. It's the impact of just how pent up something can be and how overblown something can get if you have a catalyst. So I cannot tell you at all that the soybean market or the corn market is going to act like the silver market. It would be sure a heck of a lot of fun if it did. But I can't tell you that it will. But that's the way money flows through these markets a lot of times. Imagine this, okay? For every long that was in the silver market in late November and early December, there had to be a short somewhere, right? You can't have a long without a short. One of those big shorts was a very, very large bank by the name of JP Morgan. JP Morgan was a large carrier of short positions in silver. They had to go to the Fed right before Christmas and borrow overnight $56 billion to make a margin call. That's how crazy the silver market got. Y'all think we've had some margin calls in the past. Imagine $56 billion. I'm not trying to get off track with silver. I'm trying to make a point that there is very little managed money position in corn today. They're very neutral. There's very little position in soybeans today. They went from quite long to significantly less long. There's a small short position in wheat. There's a short position in soybean oil. There's a short position in soybean meal. None of them over-exaggerated that much. But managed money has been directionless when it comes to ags for a while. If we get some catalyst, if I knew what that catalyst is, we could all be rich and retire on the same island. I don't know what that catalyst is today. But if we get some sort of a catalyst that would send money into a market that has 10, 15, 20% move type of potential in the grains, there's always potential, there's always hope. Hope is never a strategy, I always say that, but there's always those kind of opportunities out there over time. And we do not have to fight money flow today. If anything, money flow is geared up to help you because we're already so low historically and they're just waiting on a catalyst. If we had a headline tomorrow that said E15 was being discussed in the EPA, just being discussed as a 5-year, scaled-in mandate, we would have $5 corn by the end of next week. No doubt in my mind. It might not happen. We just need that headline. That's kind of the coiled spring effect that we have in some of these cheaper price commodities today. We just need something that's going to pop that coil, and we just don't know what that is today. I'm not trying to turn everyone bullish in this room waiting for a cold spring to pop in the next month, because it likely won't happen. But if we get enough of a rally into the 460 range, if we can get an 11 handle on beans again, I wouldn't own any more new crop or old crop beans. And I know most of this room are not going to say, you're not going to jump up and down and say 460 corn is great. No one in this room is going to say that. But I just don't see much opportunity above that unless you tell me something I don't know today, or the market doesn't know today. It's just absent a driver for upward price movement.
About livestock feed demand.
Livestock. Okay, let's talk about something bullish. Let's feed some cattle. Have you ever paid any more for a 400-pound feeder in your life? Oh my God, right? So, livestock markets are quite exciting. The problem is, and I can go back to, we've got some big demand numbers in here for the grains because of feed, but that feed number is really not based on numbers of cattle or numbers of hogs or numbers of poultry, okay? So I'll get you a cattle question in a minute. We got 6.1 billion bushels plugged in for feed for corn. That's the highest number since 2003. You would like to see some corresponding animal numbers to justify that kind of a feed number, and we just don't have it. We are feeding to much heavier weights. We don't have the numbers. The Mexico screwworm situation is also a problem. We typically import about 1.2 to 1.4 million head of feeders from Mexico a year. We have not imported one in the last 6 or 7 months. We have a lot of clients in the Texas Panhandle on the cattle market side. Their pens are down because they can't get Mexican feeders, and they're buying them from Nebraska and South Dakota to come to Texas to try to keep their yards full to replace the fact that the Mexican imported feeder is not available today. So we have a supply constriction in the marketplace. I have been shocked at the price of beef and its demand holding as well as it has. Everyone in this room has probably paid a jaw-dropping amount for a ribeye steak. But you still pay that jaw-dropping amount for a ribeye steak. We have not seen demand come off despite how expensive beef has gotten. That's kind of an inelastic demand indicator, and that's a positive thing for beef because we need beef prices to stay up there in order to justify the kind of numbers that we have. On the hog side of things, we have a staggering number of it's basically a sow efficiency number. How many piglets are you getting per sow? It is huge. Our sow numbers are down, but the performance of them are through the roof. So we have really positive, profitable scenarios going on, especially in beef, a little less so on the hog side of things, and we're relatively flat on poultry. But that is a profitable side of ag, and you will make a lot more money shoving that corn through a feeder cow today than selling it anywhere in the country. okay? The problem is, we can't get enough feeders in this country fast enough. We just can't. You will probably still be paying an astronomical amount for 450, 500, 600 pound feeders. But today, what I see on the fundamentals of the cattle market and the inelasticity of beef price and beef demand, I would still pay those jaw-dropping numbers. I think it's still going to pay. There's a couple other hands back here. Yes, sir.
So we can honestly make money at 450 corn, whatever.
Right.
But the problem is the inputs are so high.
Yeah.
I don't know if you follow that or any trends there.
And I do. I would not call myself an expert like someone from the major three producers around the world, or even the big suppliers like a Nutrient or something like that. So I'm not going to know the fundamental nuts and bolts of why anhydrous today in Adams County is X, because there's a few little nuances to whenever you get to any spot. But big picture, the reason inputs are so high is twofold. We do have a supplier cartel. We only have 3 of them in the world that supply a vast majority. So don't go downstream to the retailer. I mean the producers, right? This is the mosaics of the world, okay? CPs. So when you think about those large companies, we have very little competition. So they have a lot of pricing power, and none of them are in this country. So what happens with most of our input demand, okay, so I'm trying to stay out of a specific type. I'm not trying to say just DAP or just NH3 or just whatever. We import a tremendous amount. Every single country that we import a tremendous amount from has a higher tariff today with the United States than they had a year and a half ago. So you have pricing power in a very small amount of people, and you have the perfect reason landed in your lap as to why you can raise rates. And that was you just got slapped with a 10 or 15 or 20% tariff because of whatever country you're in. That's a difficult pill to swallow. If you're Trump or your Ag Secretary, USDA Secretary, you threw out that bridge payment saying that was some of that tariff revenue passed back as the Band-Aid for what happened on the other side. I'm going to say that Band-Aid wasn't big enough, right? But that's the narrative of the administration. But the reality of the fundamentals of the input question that you have is it is very tariff related, and it is with such a small group of producers that have a lot of pricing power and none of them are in this country. It's a crappy answer. But here we are. Yes, sir.
Point of information, today's retail price of Jet A at the Coconut Airport is $3.97 a gallon, and airlines get a significant discount off of the retail price of the local airport, just as a point of information.
Okay. So I was a little high on my aviation fuel price. I think it depends on where you're at, but yes, it could be. I know my $10 to $12 number for SAF is not too high, because that's the numbers I've read recently. Those are exponentially high. So we may have been $5.50 or $6 a year or two ago, because everything has come down, so it's probably not a correct number that I said, but it is materially more expensive than gasoline or diesel, percentage-wise.
$5.99 a gallon.
$5.99? Quincy, okay. I'm not here to get into an aviation fuel debate. You all can talk after the meeting. So, but it's just higher. It's higher than gas or diesel. That's the main point. And SAF is multiples higher, and that has to come down for us to really make it viable for a demand driver in the future. That's still the takeaway message.
Brian, what about alternatives in the Dakotas and things like that? If they, if beef's not making money and they produce, only pH is going to be a lesser number, what options do they have as far as
I mean, you do
other options?
have more options in the Dakotas. I mean, there are a lot of producers up there that might farm 10, 20, 30,000 acres that put in 6 crops. You do have spring wheat, you do have sugar beets, you have canola, and corn and beans, and you also have pretty strong hay production up in that part of the world too. Various alfalfa hays that occupy a fair amount, especially South Dakota. So there are some more options, but I don't see some of those being, you're not going to change a couple million acres in North Dakota because of sugar beets. You're not going to change a couple million acres in South Dakota because of canola. Those are 50,000 to 100,000 acre year-over-year movers. They're there, but you can only move those so much. They're called small grains for a reason. They're just that much smaller for acres. I mean, the big driver in acreage growth, we have been reducing acres in more states in the Corn Belt than we have been raising acres because of urbanization and other things. But we have been growing acres for corn and soybeans in the Dakotas. We have been converting acres up there. Iowa, Illinois, we've actually seen a slightly shrinking base because of just, drive around Des Moines, you used to see, suburbs going up in every direction. I mean, there's urbanization taking farmland every year.
Any new developments on South America's expansion, Brazil's expansion?
I mean, South America grew 2.5% this last year with their acres. Their weather has been outstanding in the last 45 days. Their expansion in the future is likely to stay on pace or grow a little bit more. There's actually been some changes into some tax laws in Brazil that were paying incentives to companies to not advance into some certain states where the Amazon is at, and those tax incentives ended in 2025. That actually made companies like ADM and Bunge and Cargill $20, $30, $40 million a year in tax incentives to not expand in some of those fringe areas of the Amazon, and that ended on January 1st. So, there's some speculation that actually may accelerate. But it's, Brazil grows almost 50% more beans than we do. I didn't go through these charts, but they continue to just go off the page when it comes to soybean production as a percent of the total. And I may not have it in else, it's up here. 244 million tons, and Brazil is 178 million of it. If you put that into bushels, you're north of 6 billion bushels, and we're barely north of 4. I mean, we used to be the same 7 or 8 years ago. We used to be larger every year before that, and now they're 50% larger than we are. I mean, it's substantial how much they outgrow us on beans. Now, a lot of their soybean acres have corn behind them. One bright spot is their corn incremental production. They had a record corn crop this year from a production standpoint. Their exports are flat to slightly down, and the reason is their domestic consumption in Brazil of corn for ethanol is rising pretty rapidly. We do have good ethanol demand in Brazil growing. Our ethanol demand is good but flat. Theirs is good and growing. They've got 5 or 6 plants under production, and about every other month a new one comes online in Brazil. They're using more of their corn domestically, so their growth is not getting exported out of the country like the beans are. Their growth is mostly staying at home, like our growth did in 07, 08, 09. We were building all of our ethanol industry out. They're in a similar mode for ethanol in Brazil using Brazilian corn, which is another partial driver to why our exports are so good. Is we're not competing as hard against Brazil as we have in a couple years past. Any other questions? All right, fantastic. Thank you all for your time, and I will hang around like I typically do after this. And I take that back. I'm sorry. One of the reasons we put this meeting on every year is to at least briefly mention the JSA Select Program that we've been doing here for 14 years. This is the 14th. Many of you in this room have been involved in that program. The program is very much designed to assist you in some of your marketing efforts. If you look for this program to hit home runs on price every year, it will not do that. If you look for this program to be slightly above average for a 12-month period of time, that's exactly what it's done over the last 14 years. Not every year perfectly, but we're slightly above average by the tune of about 30 cents on corn and 40 to 45 cents on beans over that 14-year period of time. And I really do like the program as a benchmarking tool. We tell you what we're doing with that pool of bushels, if you have some bushels in it. You see whether we're buying some bushels back. You see whether we're adding to hedges. So it is helpful from a benchmarking tool standpoint. Our approach to this program is rather conservative. I can tell you 10 years ago, there were 6 or 7 other companies doing this type of program. You had Cargo Pros, you had ADM Advantage, you had Gumby Alliance, you had Central States this, and the Andersons had their freedom version of it all around the country. And to my knowledge, there's only one other one out there that still is doing a program like this. If you really swing for the fences in programs like this, you're going to have a major strikeout. And when you have a major strikeout, like some of our competitors have had with this style of third-party pricing program, that means like your price was below the low of the market for a 10-month period or something like that. And there's a way that you can dig yourself into a hole and make that happen. We're much more conservative than that. That's also the reason our prices in a market like this are not 75 cents above the market. I mean, we just don't have the opportunity with a more conservative approach. Our goal is to give you a good benchmarking tool, and you can certainly have some opportunities to do better than we do because we're not swinging for the fences. But we also want to be here again next year to do it. I mean, our prices this year for fall corn was in the around 440 range for futures. No one's going to jump up and down for that. But at the time, the market was in the 420s. Our winter price was in the 450s, and the highs post-harvest was 452. I mean, there hasn't been a lot of opportunity to really do much better than something in the mid-4 range, and we were right in that range as well. Beans, we were a little bit better in the fall. The winter program, because of that big rally that happened in October, we were already fully priced in front of that rally. We didn't participate in that dollar move from 10.50 to 11.50 because we were sold in our winter program at around 10.70. So we didn't participate in that one move that happened there very, very quickly. If you take that move out, the price looks great for the year, but we did have that rally that we didn't participate in. We were already sold. So just to kind of give you a little bit of background as to what we do in this program, and if you've never done it before, I encourage you to put an amount of bushels in that is not a significant percentage of your production, to see how it operates, to see how it flows through, to see how the communication about what we're doing helps you with your marketing plan, and then decide if it's worth putting more in the second year or something like that. So if you've never done the JSA Select before, some of the URSA folks give you a call and ask you about it. I would encourage you to, if you grow 50,000 bushels of corn, put in 5,000 bushels. It's a benchmarking tool. See how we do compared to how you think and the timing at which you're thinking. We're always selling ahead. We have a 2-year program, which is for the fall of 26 that was signed up for last year at this time. You can sign up for the fall of 27 now. We're already 50% sold for corn and beans for this next fall because there's so much carry in the market. I mean, you have to think that far ahead when there's carry in the market, and we don't see a tremendous amount of upside, so we are pretty heavily sold in that program. So anyway, that's the sales page, that's the plug on JSA Select 2. I would encourage you to take a look at that. For those who have been in it for a while, thank you. We hope you continue to, but if you haven't given it a try, I encourage you to. That's all I got on that. Now I'm done. Sorry for the head fake.
Thank you, Brian.